We have with us today Joint Managing Director and CEO, Mr. Shobhan Mittal, and Mr. V. Venkatramani, the CFO of the company. Before we begin, I would like to state that some of the statements made in today's discussion may be forward-looking in nature and may involve certain risks and uncertainties. A detailed statement in this regard is available in the result presentation that was sent to you earlier. I would now like to invite Shobhan Mittal to begin the proceedings of this call. Thank you, and over to you, sir.
Thank you, Rishabh. A very warm welcome to everyone present, and thank you very much for joining us today to discuss Greenply's operating and financial performance for Q4 and financial year 2018. I will talk briefly about the performance of our businesses before passing it on to Venkat to run you through the numbers for the quarter. Our plywood business for the quarter stood at rupees 305.78 crores compared to rupees 306.4 crores. We are hoping that implementation of the e-way bill system will lead to a significant shift from unorganized to branded segment. Gross margins were lower due to lower realizations in plywood and losses in wallpaper and other categories. We've entered the lower segment of plywood through the outsourcing route with the introduction of two new brands, Bharosa and Jansati. And this should provide us a new category for growth in plywood. Our new decorative veneers unit in Gujarat commenced commercial production in April 2018. We are undertaking a significant expansion of our face veneers peeling capacity in Gabon from 36,000 cubic meters to 96,000 cubic meters. The expanded capacity is expected to be available in April 2019. We are in the middle of setting up a decorative veneer plant near Rajkot, Gujarat, operational by Q2 financial year 2019. We are also planning to increase our outsourcing proportion to 30% from 22% presently over the next 3 years. Our MDF business sales have fallen by 23.7% in this quarter. This was primarily due to lower sales volume and a steep reduction in prices by the competition. However, our MDF EBITDA has expanded in value terms from rupees 129.43 crores in FY 2017 to rupees 135.85 crores in FY 2018. MDF EBITDA margin was 28.8% in FY18 versus 27.15% in FY 2017. Improvement in EBITDA was achieved in spite of reduction in savings from excise exemption post-GST, which has had an impact of 13 crores, equivalent to 2.75%, and foreign currency losses of 14.64 crores, equivalent to 3.1%. Our new MDF plant in Andhra Pradesh, with a capacity of 360,000 cubic meters, is expected to commence commercial production in June 2018. I would now like to hand over the call to Mr. Venkatramani for the financial numbers. Thank you.
Good afternoon, friends. I thank everybody for joining us to discuss the Q4 FY18 financial performance of Greenply Industries. In Q4, our top line was down by 6% compared to the year-on-year quarter. This was largely on account of a steep fall in MDF revenues to the extent of 23.7%. Plywood contributed to 72.8% of total revenues and MDF contributed 25% of the total revenues. In Q4 FY18, our gross margins fell by 310 basis points year-on-year to 44.8% due to lower realizations in plywood and losses in wallpaper and other categories. Average realizations in Q4 FY18 in plywood were lower by rupees 14 per square meter from rupees 231 to rupees 217. In Q4 FY18, MDF realizations were marginally up by about 0.8% to rupees 25,954 from rupees 25,737 per cubic meter in the corresponding year quarter, primarily due to higher realizations in the domestic markets. EBITDA margins for the quarter were down by 290 basis points at 13.9% due to reasons mentioned before. Capacity utilizations in the quarter were 106 for the plywood segment and 100 for the MDF segment. Profit after tax was down by 22.1% at rupees 32.6 crores compared to rupees 41.86 crores in Q4 FY17. Our capex incurred for FY18 amounted to rupees 362 crores, and we expect to spend rupees 150 crores in FY19 to complete the expansion projects. Our working capital turnover days has increased to 62 days owing to an increase in inventories. Net debt to equity ratio stands at 0.71 as on March 31st due to incremental debt taken for funding our capex requirements, especially rupees 384.62 crores on account of expansion in MDF. That concludes my presentation. I would now request you to open the floor for the Q&A session. Thank you.
Thank you very much. Ladies and gentlemen, we will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Achal Lohade from JM Financial. Please go ahead.
Yeah, thank you for the opportunity. Just wanted some clarification on the numbers, sir. If I look at the reported revenue in your press results, it's 437 crores. But if I look at the PPT, the addition comes to about 420 crores. So where is that 17 crore difference? Because if I notice your gross margin tend to be different than in your earnings release as compared to PowerPoint presentation.
Could you repeat that question, please?
Sir, if I look at the segmental numbers in your results, especially for the MDF business,
okay,
compared to what is reported in the PPT, what is there in PPT?
Okay. That includes other income, other operational income.
Okay.
Because we are saying segment revenue, not net sales. So segment revenue also includes other operational income, primarily refund of GST, which amounted to about 15 crores in MDF and about 2 crores in the plywood segment.
Okay. So that's part of the core revenues you're saying in the segmental numbers.
That's
but
correct.
In your EBITDA margins, what you have mentioned, are they part of the EBITDA as well?
Yeah, part of the EBITDA.
Because, exactly. So because if I look at the EBITDA adjusted for the Forex loss, I see a EBITDA margin of 38% for fourth quarter. So I was just curious to understand, on one hand we say that the realization dropped, but on the other hand our margins seem to have improved quite dramatically.
Okay. So there were two reasons for it. Earlier we were having a legal case against us in respect of excise exemption in MDF. So we did not account for the second quarter and the third quarter GST refund. Now, we have won that case in February. So GST refund for quarter 2 and quarter 3 were also accounted for in Q4, which was approximately about 12 crores 42 lakhs.
Okay.
So that's the reason for the steep increase in MDF EBITDA margins. And it was also impacted by about currency loss of 7.33 crores in Q4.
Got it. So just to clarify once again.
If we adjust for these factors, then our MDF Q4 EBITDA would be 26.81 crores.
And the revenue would be?
Revenue would be 105 crores.
105 crores. Okay. Got it. That's helpful. Number two, in terms of the ply business, we see that the volumes have grown 5%, but our margins have come off. You've indicated in the PPT that it's driven by low-end products. If you could clarify a bit as to, what is the mix currently in terms of the premium mid and low end, and how the growth has panned out in 4Q as well as FY18?
Okay. So if you look at our volumes in plywood for fourth quarter, so we had about 4.5% growth in the premium segment and about 7.5% in the mid segment. And due to lower demand in the quarter, we had to pass on some additional incentives to the dealers in the form of schemes or special discounts, which resulted in a lower realization.
Okay.
And there was also another impact, we were working on the new decorative veneer unit in Gujarat. So, while setting up the unit, we had to dismantle some of the labor quarters. So the write-off on that account amounted to rupees 2.75 crores, which again impacted this quarter's margins.
Got it. So what's the outlook in terms of the ply business? What kind of revenue growth one can look at? And also for the MDF business?
So if we are targeting a 12 to 15% growth in plywood for FY19 and 100 basis points improvement in the EBITDA margin. So compared to the 10% margin that we did this year, we would be targeting a 11% EBITDA margin next year, primarily because we will be shifting entirely to the Gabon face veneers, which will result in some cost reductions. And on the MDF side, so we do not expect any further improvement in capacity utilization at the Uttarakhand unit. But we are targeting to start commercial production at the new Andhra unit in June and targeting an annual capacity utilization of about 45% for FY19. On the MDF margin front, we would be targeting about 24 to 25% EBITDA margin for the existing plant and about 14 to 15% for the new plant.
Got it. That's helpful, sir. I'll come back in the queue for further questions. Thank you.
Sure. Thank you.
Thank you. The next question is on the line of Ashish Poddar from Anand Rathi. Please go ahead. Ashish Poddar, your line is unmuted for questions. Please go ahead.
Yeah, good afternoon, sir. This is Ashish. My question is on the MDF side. So as we are seeing huge capacities setting up by the domestic players, and we are hearing also the price war happening among the players. If you can give some sense that even if this 24-25% kind of EBITDA margin, which is very close to your FY18, is it sustainable on a 2-3 years perspective?
Okay. So if we look at our FY18 margin, our FY18 margin was 28.8% in MDF. And now I'm giving a guidance of about 24 to 25%. So we are, estimating that there could be a 4% fall in EBITDA margins at the existing plant in Uttarakhand. As regards the new plant, so one is we'll be operating at a lower capacity utilization of about 45%, and there would be a mix of domestic and exports. We are targeting about a 70 to 30% ratio for domestic and exports. And since exports realization are about 35 to 40% lower compared to domestic realization, hence the reason for a much lower margin at the new MDF plant.
Okay, so this 24%, 25% kind of margin, I mean, you are taking into account all these factors.
That's correct. So I'm giving a guidance for the two plants separately. For the older plant, I'm giving a guidance of about 24 to 25%, and for the new plant, I'm giving a guidance of 14%.
Right. On the plywood side, so far we were focusing more on the mid and premium segment, and now we are talking about entering into the low segment. I mean, you could have, that low segment is still a very big market, captured by the unorganized players. What is your strategy, getting into that segment, and why, if that was the case, then we could have entered that segment earlier also. So what has changed in last 1 year which has forced you to look at that segment?
Okay, so if we look at our top line in plywood for the past couple of years, we have been having very low single-digit growth, and we feel that growth in the premium segment will probably continue to be impacted for the next 2 years till we see a significant improvement in real estate demand. So that's the reason why we are entering the lower segment of plywood, which is a very big market. So again, we are not entering the completely cheap plywood segment. We are entering the lower segment of the mid segment.
But that anyway it will be impacted by your MDF. So there is a huge cannibalization.
That segment is not impacted by MDF. MDF is impacting the cheap plywood segment. So we are not entering the lowest segment of plywood. We are entering the unorganized mid-segment plywood. So till last year we were present in the premium segment and the organized segment of the mid-segment. Now we are entering the unorganized segment of the mid-segment.
Okay. And so will that, so those two brands will have a different channel, or you will use the same channel, the existing channel?
Yeah, we will have a different channel for this.
So can we expect your ad spend, increasing because of promotion on these two brands?
No, we will not be doing any ad spends on these two brands. So we'll just be developing the dealer network, and that will take care of the sales. So there will not be any increase in the ad spends.
Okay. Thank you so much, sir. I will come back in the queue.
Thank you. The next question is from the line of Kaustav Bubna from Red Enterprises. Please go ahead.
Yeah, hi. Could you please share the realization, broad range realization per square meter for your mid-segment plywood versus premium segment plywood?
Realizations for the mid-segment plywood were 162 in the current quarter compared to 178 in the year-on-year quarter. And realizations in the premium segment were 243 rupees compared to 255 rupees.
Okay, so moving on to MDF, Shobham, just wanted to understand, so currently we've seen a lot of capacity come in, and your competitors cut down prices to get more presence in the market. So what's our strategy over here? How much confidence do we have in our brand value and distribution to maintain prices? Is our strategy to maintain our realizations, not get succumbed in this price war? And how do we see the price range stabilizing moving forward?
So, you see, we've already been involved, if I may use the word, in the price war for the past few months, because we have been countering the price reduction by way of our own strategies of launching different schemes, etc. However, going forward, the kind of competitive advantage that Greenply stands to have with regards to having two plants in the two locations and giving us the paid benefits, I don't foresee that there would be any major kind of a pressure that we will not be able to sustain. We are in a fairly comfortable position. Even the margins that we have attained today have been post countering price reductions by way of our own internal price reductions, by way of schemes, etc. So I don't foresee a major challenge in terms of competition that we will not be able to sustain. And the numbers that Venkat has said earlier in terms of EBITDA margins had factored those, price reductions, etc., that we're planning to pass on to the market. There will be also cost reduction on our part, especially in the North plant, because, the quantity of material, almost 40% of which was being sold to the South, would in turn shift to the North of India, which would result in a higher exactly realization. So even if we pass on those benefits, we're able to gain a better exact realization per cubic meter on the North plant. So combining all these factors, I think we are fairly comfortable of addressing this competition issue.
Would your realization improve this quarter means, is that the right thing to infer from that is that you all did not reduce prices?
No, what I'm trying to say is...
We did not reduce any prices in this quarter.
And hence you saw your 20% volume drop.
That's correct.
Because of the pricing pressure two new plants have started. From what I hear, Action has drastically reduced prices.
That's right.
And so will this continue into next quarter too? Will we see volume pressure in the next quarter, in quarter 1 FY19 for the same reason in MDF?
I think for the next quarter or two, we will continue to face pressure on the volumes. But going forward, we may act by way of passing on some price reductions as well, and which would allow us to go back to our normal volumes. It's a question of letting the market stabilize and allowing us. We're also internally working on various cost reduction elements which we may be able to achieve, especially on the glue side. So factoring all those in, we may be able to pass on some benefit to the market, yet be able to maintain our margins.
Okay, great. Could you just share your plywood business debt, total debt, and your Uttarakhand plant debt? Your total plywood business debt and your MDF Uttarakhand plant debt.
Yeah, just a moment. Okay. Yeah, so the plywood business, which will continue in Greenply, will have debts of around 200 odd crores.
Okay, and the MDF Uttarakhand unit debt?
That's marginal, about 20 crores.
It's about 20 crores. Okay, and the debt coming into the new plant is about?
Debt at this point of time for the new plant is 384.62 crores. And by the time we complete the projects, it's expected to be around 470 crores.
Okay, great. I'll get back in the queue for more questions.
Okay, thank you.
Thank you. Ladies and gentlemen, in order to ensure that the management is able to address questions from all the participants at the conference, please limit a question to 2 per participant. If time permits, you may join back to the question queue for any follow-ups. Thank you. The next question from the line of Sneha Talreja from Edelweiss. Please go ahead.
Good afternoon, sir. Thanks a lot for taking the question. Sir, if I'm not wrong, you were saying that because of the pricing reduction that has been taken by the competitors, we were not able to grow our volumes in the MDF segment?
That's correct.
So what would be the revenue, what would be the volume decline in the domestic market, and what was it in the exports market also, if you could specify the mix which is right now?
Okay, so if you look at volumes in Q4, for the domestic market, we did 48,709 cubic meters.
Okay.
Sorry, for the domestic market, we did 34,779 cubic meters compared to 48,709 cubic meters in the corresponding quarter. And in exports, we had a marginal growth from 4,770 cubic meters to 5,689 cubic meters.
From 5,000?
From 4,770 to 5,689.
Okay. And sir, right now, what would be the pricing difference between us and the competition, since they have, taken steep price decline versus we are, I think we have not taken any kind of price decline.
Yeah. So the two main competitors that we are considering today to be Action and Century. So Century is about 3 to 4% lower than us, and Action is between 7 to 8% lower than us, post their price reductions.
Okay. And sir, what is the strategy going forward? As you were saying that you would be monitoring the market at least for the next 2 quarters, and then you would be seeing that whether you want to focus on the volumes or, whether you want to take the price increase. Whether you want to take the price decline.
Sure. I think what we're also waiting for is for the commercial production of the new line to start. When we are in that situation, we'll be able to, optimize our allocation for both the plants in terms of markets for both the plants and optimize the freight costs. So I think we would like to wait out another quarter before we take a clear decision on whether we are going to reduce prices further or if we are going to counter that in some other manner.
Okay.
Sir, sorry to disrupt here, Rohan here. Sir, you mentioned that roughly 52,000 tons volume came to 40,000 tons in MDF, put together domestic as well as exports, roughly 23% down. This is only because of you are not being able to sell in domestic market without reducing your prices, right? That was the only reason.
Yes.
So going forward, when you are giving a guidance of roughly 25% margins in MDF business as against 28% margins in last year, are you factoring in price reduction which you have yet not lowered down in the market?
That's correct.
But sir, isn't it that MDF being such a capital intensive and if we are not able to utilize our assets properly, then definitely margins will be under pressure. So we could have been able to reduce the prices in the current quarter itself and able to sell in the market, or you want to wait and watch and creating inventory in the market?
Okay, so there was a series of price reductions by competition, and we did not want to take a decision in a hasty manner. So we wanted the prices to settle down before we contemplated any reduction in our prices.
Sir, as of now, what we understand that there is only one competitor which has come with
There was not a single price reduction. So starting from February and ending in March, there were about 3 price reductions by Action, and they also introduced quite a few new schemes. So dealers were apprehensive that there might be further price reductions by Action, and so they did not want to enter into further commitments till prices settle down.
But sir, if we understand rightly, Action have yet not commissioned the plant, so it's only Century probably which has come with the additional capacities in the market, while Action has yet to come.
Okay, but no, Action's new capacity has started production.
Okay, and that's why they are lowering down the prices in the market. So you mentioned that roughly Century is selling at 10% lower than your average realization?
No, Century's prices would be roughly about 3 to 4% lower than ours.
And Action is 7-8%?
Action would be in the range of 7 to 9%.
This is after their reduction in the prices or earlier?
That's correct, after their reduction in the prices. Prior to that, they and Century were at a similar pricing level.
Okay. So there has been 7 to 8% price drop has happened from Action, and you have yet not reduced 7-8% prices, so that your prices are still higher. And that is the only reason? Okay. And so have you been able to create inventory for yourself, like by not selling MDF in the market, or your production is also low?
No, production was higher compared to the sales. So like in this quarter, we had production of about 42,000 cubic meter compared to 40,000. But we did not want to, significantly increase our inventory and thereby create pressure on us for reducing prices.
Thank you, Mr. Talveja. May I request you to join the question queue for any follow-ups, as we have several participants waiting for their turn. Thank you. The next question from the line of Johadia from Standard Chartered Bank. Please go ahead.
Yeah, hi, sir. Good afternoon. Sir, this question is related to this fixed asset movement of 532 crores from FY17 to FY18. Can you please give us a breakup where this 532 crores has been invested?
So the major investments have been in respect of the Andhra Pradesh plant. We have invested about till date, we have invested about 690 crores in the new Andhra plant. Apart from that, we have invested about 40 to 43 crores in a decorative veneer plant in Gujarat, and approximately about 30 crores in new plywood unit in UP.
Okay. And, sir, how much will be the capitalized interest in this?
Capitalized interest for FY18?
Yeah.
The capitalized interest for FY18 would be about 8 crores.
8 crores?
Yeah.
Okay. And additional capex that we are projecting for FY19?
About 150 crores.
This will be for...
to complete the projects which are already in hand.
Okay, the few from this MDF New, Gujarat, and the UP.
Yeah.
Okay. Okay. And any additional debt that we are projecting for FY19?
Yeah, to complete the Andhra project, we will be taking on debts of approximately about another 80 crores.
This is only for Andhra. And for this UP plant and Rajkot plant?
The Rajkot plant is completed. We have started commercial production.
Okay.
And UP, we are not yet taken a decision on the debt.
So additional debt that will come in FY19 would be around 80 crores?
Yeah, about 80 to 90 crores.
And capex will be 150?
That's correct.
Okay. Thank you, sir. Thank you for taking my question. I'll get back in the queue.
Thank you. The next question is from the line of Abhijit Sinha from Pi Square Management. Please go ahead.
Hi, sir. So basically, I was wondering that with this new debt that we have incurred with, we are the interest rates that we'll be paying should be increasing by around 50 crores, right, per year. So how would we plan to, reduce this over the period of time?
Okay. So the interest cost will not go up by about 50 crores because most of the debts that we have taken for the Andhra plant are in foreign currency, which would be at a much lower rate of interest. So even considering any forward cover costs, so we are projecting about 30 crores of interest for the new MDF plant in Andhra and about 3 crores of interest for the Gujarat decorative veneer plant.
All right. And so is there any projection on how we will pay it off, like the period of time?
So we are generating sufficient resources. So like I mentioned, our capital expansion program will be more or less completed in the next financial year. And thereafter, we do not have any further expansion projects in hand. So all the cash flows generated will be utilized for reducing the debt levels.
And sir, the payback period for these projects would be around?
The payback period for the Andhra project would be approximately about 6 years.
All right. And so if the Gujarat one?
Gujarat plant will be 3 years.
Sure, sir. Thank you so much, sir.
Yeah.
Thank you. The next question is from the line of Pranav Mehta from Equirus Securities. Please go ahead.
Yeah, hello sir. Thank you for taking my question. So I wanted to understand on the what was the cash flow for FY18, cash flow from operations.
Okay.
And sir, the other question is that have you taken any price hikes in plywood? And can you share the realizations in MDF in exports?
Okay, just a second. So first question was on?
Sir, CFO, cash flow from operations for FY18.
Just a moment. Yeah, so net cash flows from operations were about 102 crores in FY18. And what was your next question?
Sir, any price hikes taken in plywood or expected to be taken anytime soon?
Okay, so we had taken 1.5% price rise in plywood in the March quarter, which we expect would be implemented in the current quarter.
Okay, and apart from this, any price hikes you are expecting to take because of increase in raw material cost that we are hearing about chemicals and everything?
No, we are not expecting to take any further price increases in Q1.
Okay, sir. And sir, any realizations in MDF exports?
Realizations in MDF exports in Q4 were 15,502 rupees per cubic meter, and for the full year was 15,716 rupees per cubic meter.
Okay. And sir, I just missed the capex number for FY18. So how much capex did you do in FY18?
About 360 crores in FY18.
Okay, yeah. Thank you, sir. That's all. Answered.
Thank you. The next question is from the line of Romil Jain from JM Financial. Please go ahead.
Yeah, hi. Thanks for taking my question. So just some understanding on MDF segment. We have seen that the demand for MDF is good and only because of the incremental supply which is coming in is kind of putting some pressure on the realization. So not over a short-term period but over a slightly medium to longer term, where do you see the prices, kind of settling down and the margins settling down in this MDF market? And second, what kind of unorganized market is there in the MDF segment?
So, hello?
Yeah.
Yeah, so like you mentioned, we did not take any price cuts in MDF in the last quarter in spite of price cuts by competition.
Sure.
So we continue to stick to our prices unless we see further price reductions by competition. And as far as margins are concerned, we expect to start commercial production at the new plant in June 2018. So once that happens, dispatches from the northern plant to the southern states will be, shifted back to the north zone. So that will result in a savings of about 2.5%, which would be passed on to the consumer. and we hope that will provide a more level playing field as far as competition is concerned.
Okay. Okay. And second question is on the plywood segment. So just wanted to understand how is the progress on e-way bill so far? Are we seeing any impact on the unorganized players and organized players getting some benefit? How do you see that?
No, we have not yet seen any impact of the e-way bill as of now. But we are expecting that, over the next 2 quarters, once the government is able to generate some data from the e-way bill system, they will start cracking down on the unorganized. And that will lead to a significant shift from unbranded to branded over the next 2 years.
Okay. Okay, sir. That's it. Thanks.
Thank you.
Thank you. The next question is from the line of Kamlesh Kotak from Asian Market Securities. Please go ahead.
Hello, good afternoon, sir. Sir, just to revisit, sir, could you help us understand what would be the capex for FY19 in both plywood and MDF businesses?
Okay. So capex in plywood business is expected to be minimal. I think about only the routine capex apart from a small part of the capex for the Gujarat decorative veneer plant, which was completed in April. That was approximately about 5 crores. So the bulk of the capex will happen at the Andhra MDF plant, which would be approximately about 100 to 120 crores.
And for Gabon plant, sir?
Gabon plant, we would be investing about 65 crores over FY19 and FY20.
Okay. Secondly, sir, just you can get some more granular details about the proposed demerger of the 2 businesses. What the basis of it? Because one of the businesses is contributing significant and the other is still small. So the basis of equal shareholding between the 2, how that is being worked out? Is it based on the assets or how you see that?
Could you please repeat that?
The demerger, I wanted to have some color on. What is the business rationale for the 1:1 ratio that has been arrived at, while the business of MDF is significantly lower in contribution compared to plywood as of now? So how the demerger ratio has been worked out? Is it based on the balance sheet?
Okay. So it's based on the revenues post-split, which will be more or less similar. Because not just the MDF business, part of the plywood business comprising of the Uttarakhand plywood unit will also be transferred to the new company. And post that, the revenues will be more or less equal for both the businesses.
So what will remain in plywood business, sir? The Uttarakhand plant would go...
We'll have the Nagaland, the West Bengal, the Gujarat, and the trading business of plywood that would continue with Greenply. The Myanmar and the Gabon facilities would also continue with Greenply.
Okay. But then would the other entity be dealing also in the similar products of plywood?
Yeah, both of us, like the Rudrapur plant would also be in the premium segment of plywood.
So there will be some competition and overlap also in terms of the business for both the companies?
There might be a slight overlap, but we are trying to build a separate distribution network for the Uttarakhand plywood plant, and it will also be sold under separate brand name so that we do not, get into direct competition.
So Greenply would not be common for both the entities in terms of the plywood business?
That's correct.
Which brand will go to which company, sir?
So Greenply will remain with Greenply, and the new company will have the Green Panel brand.
Okay. And there will be complete demarcation of distribution also between the 2?
Yeah, significant demarcation of distribution network.
And who would be in charge of the overall management affairs of the business from the promoter side?
Okay, so Mr. Rajesh Mittal and his son will look after Greenply, and Mr. S.P. Mittal and Mr. Shobhan Mittal will move to green panel.
That is the MDF business.
That's correct.
All right. Great, sir. Thank you. That's very useful.
Thank you.
Thank you. The next question is on the line of Anand Dubey as an individual investor. Please go ahead.
Thank you for taking my question. So my question in relate to plywood business in FY19, how much growth we are seeing?
So we are targeting 12 to 15% growth in plywood. Most of it will come from our entry into the lower segment of the mid segment.
And what kind of EBITDA margin we are looking, sir?
So our FY18 EBITDA margin was 10% in plywood. We are targeting 100 basis points improvement in the plywood margin.
So it is around 11%?
That's correct.
Okay, sir. And what kind of MDF business growth in FY19?
So the existing plant in Uttarakhand operated at about 100% capacity utilization in FY18, and we are expecting a similar capacity utilization in the current year. And for the new plant in Andhra, which is expected to commence commercial production in June, we are targeting a 45% capacity utilization for the FY19.
Okay, sir. Sir, my related to third question, sir, our debt level is increased so much. So what kind of rate of interest we are looking?
So for a significant portion of the debt which we had taken for the Andhra MDF plant, so most of the borrowings are in foreign currencies, where the level of debt is, for about 300 crores of debt which we have taken from a German bank, interest rate is 0.5%. And for $11 million dollar loan, we have taken interest rate is 3.75%. But post-forward cover, we are expecting about 7.5% interest rate for the new borrowings.
Okay, sir. Thank you. Thank you for taking my question.
Thank you.
Thank you. The next question is from the line of Vijay Kapre as an individual investor. Please go ahead.
Hello.
Yeah, good afternoon, Vijay. Please go ahead.
Good afternoon, Venkatji. Thank you for giving me this opportunity. My first question is relating to the new MDF plant. We had first decided not to go for any power plant. Now I have seen your new website. It says that we have put up an energy plant from Thermax over there. So what is the capacity there and what is the rationale for going for the plant when we first had decided not to go for it?
No. Our power plant is completely different from an energy plant. So energy plant basically raises steam which is required for production. It's not generating power.
Okay, so what is its capacity?
I wouldn't be able to give you the capacity. I'll check with the plant technical team and come back to you.
Yeah, sure. My second question is relating to the Gujarat plants. There was an announcement made, I think, so 1 month back that some commercial production has started for the Deco veneer plant. Are there 2 new plants which are being set up in Gujarat? Because your presentation says that the Deco veneer plant near Rajkot will be starting in Q2 of FY19.
No, I'm sorry, that was a mistake. It's already started production in April. Our original target was July, but we started commercial production in April, end of April.
Oh, all right. Yeah, that's all. Thank you.
Thank you.
Thank you. We have the next question from the line of Rohit Dakania from IDFC Securities. Please go ahead.
Yeah, hi, good afternoon. Thank you for the opportunity. Just wanted to understand if you can, sort of talk about any pricing pressure on the raw material side for both the segments.
We have seen improvement in some chemical prices which are linked to crude. But at the moment, there's not been a significant impact on raw material because wood prices, which are the main raw materials, have remained reasonably stable. So we are not seeing any significant impact of raw materials on our prices because if you look at Q4 numbers, our gross margins have remained intact even though we have not gone for any price increases.
Sure, but is there a reason to believe that chemical prices could go further because of the recent up move in crude, and could that impact our sort of guidance of 11% margin on the plywood side?
Okay. We have not considered any increase in chemical prices due to increasing crude prices. We do not know whether crude prices will go beyond the current level or whether they will fall because recently Russia and some other country have informed that they will be increasing the production of crude, which will possibly impact prices. So we have not considered any increase in crude prices.
So my question was, so basically this 11% margin is assuming that crude probably stays where it is currently, right? Okay, perfect. And so in terms of the, sort of plywood plant in UP, what would be the capex that would be doing and when would it be sort of operational?
So at the moment, we are having a look at the Uttar Pradesh capacity. So probably we will take a final decision on that in the next board meeting, which is expected to be towards the end of July.
So you mean it could be delayed or, the capacity could be lowered, something of that sort?
Yeah, both possibilities exist.
Okay, sure, sir. Thanks.
Thank you.
Thank you. We have the follow-up question from the line of Achal Lohade from JM Financial. Please go ahead.
Yeah, just a small clarification, sir. You said Rudrapur plant, the plywood unit will also go with in green panel. What would be the revenue size of that plant and is there any possibility of they competing against us or by setting up new facilities, or it can be only this facility they can utilize?
Okay. So in last year's revenue numbers, the Uttarakhand plywood unit contributed 300 crores, which I think would be approximately about 27% of the plywood revenues. And going forward, green panel will not do any expansion in plywood.
Got it. But how about the distribution? Wouldn't be the same distribution or, how about the brand? Would that be the same? Wouldn't that create any confusion in the market with respect to
for the Uttarakhand plywood unit, we will be going for a new brand, Green Panel. And we are also setting up an alternative distribution line so that it does not compete directly with Greenply's plywood business.
Right. Okay. Sir, you mentioned about the GST refund. I forgot to ask you, is this a recurring one or this is only relevant for the current year, FY18, or this would be accounting for, on an accrual basis going forward?
Okay. So we will be as far as the GST refund for the MDF plant is concerned, so this year the GST refund was higher primarily because we had two different GST rates. GST rate was 28% from July, and sometime in November it was changed to 18%.
Right.
And going forward for FY19 and FY20 will be entitled to the refund of GST, which will be approximately about 10 crores per annum for the MDF business.
Okay.
And we are entitled for GST refund for the Nagaland plywood unit. I think it's approximately about till FY25. And that would be about 6 crores on an annual basis.
Right. And the Uttarakhand MDF plant entitlement is till what period, sir?
For the current year and the next year, FY19 and
expiring
FY20.
in FY20.
Yeah.
Got it. And, sir, you mentioned about the interest cost for FY19, some 30-35 crores, right? In the last call, you had indicated 45 crores and 60 crores for FY20. What has changed?
For FY20, I had mentioned a higher rate of interest because in FY19, we will be probably operating for 9 or 10 months, So for a part of the period, 2 months or 3 months, the interest will continue to be capitalized.
Correct.
And once the plant starts commercial production, then only interest will be taken to the revenue account.
Correct. So, on an overall basis, FY19, what should we look at for the company as a whole, ply and MDF debt put together, interest cost?
So interest cost for the plywood business will continue to remain more or less at a similar level for FY19. And for the MDF business, like mentioned, we see an increase of approximately about 32 crores of interest in FY19.
Got it. So out of 9.5 crores in FY18, how much is for MDF?
MDF is negative because, a lot of interest was capitalized as per the Ind AS requirements. So we did not have any interest in the MDF business.
So roughly 10 crores in ply and 32 crores in MDF. So that's about 42 odd crores in FY19. Is that right, sir?
15 crores for plywood.
15 and 32. Got it.
Thank you. We have the next question from the line of Kaustubh Bubna from Red Enterprises. Please go ahead.
Yeah, hi, Shobhan. Just wanted to understand, the long-term growth on the MDF sector. Now, there's a myth that MDF is mostly only used for ready-made furniture, but I wanted to understand what you big players are doing to increase the acceptability for MDF and handmade furniture, because everywhere else in the world it is used. And if we want to get to that, if we want to, increase the proportion of MDF versus plywood, we'd have to increase the penetration in handmade furniture. So what are you big players doing to increase awareness to contractors, etc.?
Okay, you're correct. At the moment, most of the MDF is consumed for manufacturing of ready-made furniture, and it's not much in use in the residential segment, primarily because carpenters and contractors have a vested interest. So our MDF in pricing terms is about 50-55% lower than our plywood prices. Now, normally carpenter's labor costs and its margins are linked to the raw material costs. So if he uses MDF, his margins are much lower in value terms compared to if he's going to use a premium plywood. So, even if a resident wants to use MDF, the carpenter will do his best, to change his mind to ensure that he does not use MDF. So, at the moment, what we are doing is we are, educating carpenters and contractors about the benefits of using MDF. One, they can finish the jobs faster, they can finish projects faster, and they also get a much better finish if they use MDF as compared to plywood. And two, we are in discussions with, a major consumer, which is the government, both for use in the defense and also the Central Public Works Department. So, through interactions with these two departments, we are expecting, to see a sizable increase in consumption of MDF over the next 2 years.
Okay, and is the cost of capital an actual barrier to entry in this industry? Because I hear that, these small players, like, I don't want to take names, but you know, all the small players who didn't succeed in the past, they all say that, some of them say that they can actually use second-hand machinery or like low-quality machinery from China or something and produce at about, 100,000 plus cubic meters at about 40 crores capex cost. So what did that mean? I mean, what's all of that about?
No, I'm not aware of that. And at the moment, we do not have any unorganized segment in MDF. We have currently about 5 players, and all are from the organized segment. So if any unorganized players are intending to venture into MDF, at this point of time, I do not have any information regarding the same.
But is the cost of capital a long-term barrier? I mean, you're the expert in this industry.
Yeah, so it would depend, on what size of capacity you want to install. So I would say if you want to make reasonable margins, you should have a minimum of 180,000 cubic meter annual capacity, which would translate to at least about 350 to 400 crores of capex.
Okay, fine. So there's no way someone can come in and do that same capacity for about 50 to 100 crores of capex?
So, like I mentioned, I'm not aware of any second-hand machinery being available, which would be available at these prices.
And for this decorative veneer plant, what is the total revenue potential of that? And margin potential?
About 125 crores.
And margin potential?
About 16%.
Does Greenlam do a similar sort of business, this decorative veneer?
Yeah, that's correct.
Okay, great. Thank you.
Thank you. We have the follow-up question from the line of Sneha Dalreja from Edelweiss. Please go ahead.
So thanks for taking my question. So could you explain what will be the depreciation policy for a new plant?
So it will be depreciated over 25 years, so roughly about 4% annual depreciation.
So, sir, just to clarify, it will not be WDV for the benefit of tax. It will be SLM.
It will be SLM.
Okay. And so you mentioned that 15% EBITDA margins initially in the first year, the 50% utilization level, assuming that roughly 300 crore rupees revenue potential from MDF, that's what at 50% maximum, right? So with the interest of 35 crore and depreciation, I mean that bottom line contribution in the first year is zero close to from this plant, right?
It could be zero or maybe even slightly negative.
Losses, negative. Yeah. But sir, I mean some competitor is taking a WDV depreciation policy for claiming tax advantage. We are not following any such thing.
No, so we have different policies. So as far as the accounts as per Ind AS are concerned, we are following the straight line method. And as far as claiming a deduction in income tax is concerned, we are following the WDV method.
For claiming the tax advantage, you will take the WDV.
That's correct.
Okay. Thanks, sir. I mean, sir, more question.
So, one on the plywood segment, sir, what was the growth that we've seen in the premium and on the mid-end? I think I must have missed it in the starting commentary.
Yes, ma'am. For the quarter or for the full year?
You could just tell for the quarter as well as for the year if possible.
Yeah, one second. So we had a volume growth of 7.2% in the mid-segment ply and volume growth of 4.5% in the premium ply.
That is for this quarter?
This quarter, that's correct.
And that for the year would be FY18?
Yes, one. So it was 7.5% for the mid segment, and we had a degrowth of 1% for the full year in the premium segment.
Thank you, Mr. Dalreja. May I request you to join back to the question queue for any follow-ups. Thank you. The next question from the line of Anand Dubey as an individual investor. Please go ahead.
Hello.
Yeah, please go ahead.
As far as tax is concerned, sir, what kind of tax we are looking in FY19, sir?
So we are estimating a tax rate of 25% for FY19.
Okay, sir. Sir, how do you see the company's growth from 3 years in now?
I wouldn't like to give a 3-year guidance, but if you look at plywood, I think, like I mentioned, we are targeting a 12 to 15% growth in plywood, primarily from the lower segment which we are entering this year. And thereafter, for the next few years, we would be targeting top-line growth of about 8 to 10% in plywood. As far as the MDF business is concerned, we are projecting a significant level of growth because our new plant in Andhra will commence commercial production in June. And that will give us about 1,000 crores of top line between FY19 to FY22.
Thank you. The next question is from the line of Govind Raj as an individual investor. Please go ahead.
So this is regarding the price. We have taken up a price increase in March, sir.
We have taken a small price increase of 1.5% in plywood in February. That was partially implemented in the March quarter, and we expect that to be fully implemented in the June quarter.
But whereas other competitors have reduced their prices, sir?
No, the price reductions have primarily happened in MDF, not in plywood.
Not in plywood. Okay, thanks. I'll be back on queue.
Thank you. We have the next question from the line of Pranav Mehta from Equirus Securities. Please go ahead.
Yeah, thank you, sir, for taking the question. Sir, I wanted to understand on this loss in wallpaper business. So what led to the loss, and what are the kind of products that we are currently doing trading in? And any other products that you are expecting to add over next 1 to 2 years?
So at the moment, we are primarily involved in 3 products, wallpaper, solid surface, and white cement boards. So I don't think we'll be adding any new products immediately till these products stabilize.
Okay. And sir, what led to the loss in wallpaper business?
So we had some price reductions in the March quarter, which led to the loss.
Okay, but sir, going forward, you expecting from this segment, and will there be further losses, or will it be curtailed?
I think there could be further losses in Q1, and probably we will see a positive contribution from Q2 this year.
Okay. Thank you, sir.
Thank you. Ladies and gentlemen, that was the last question. I now hand the conference back to the management for their closing comments. Thank you, and over to you.
I thank you for taking out time to attend this earning call of Greenply, and hope that you will be back for our Q1 numbers in July. Thank you very much.